Hi again, guys. So I've put together another revision video to help you recap topic 2 of Unit 1 of the VCE Business Management course, the external business environment. What I will do in this video is go through the major areas of the external business environment by breaking the topic into 3 distinct parts. The external business environment is the first of 2 topics that make up the broader topic of business planning, which will be further dealt with in a future video. By watching this video, it will hopefully allow you to clarify some key areas which you may not have been clear on and refresh your understanding of others. This video won't go into the level of depth that you would have discussed these topics in class, but should help you with your revision by giving you a broad overview of the topic and helping you to connect your understanding of the various ideas contained within the topic. The external environment is made up of 2 parts, the macro environment and the operating environment. When combined with the internal environment, you have a grasp of all the factors that need to be considered when planning a business. If you stratify the 3 areas with macro at the top, followed by operational and internal environment, you would see a spectrum that reflects the degree of control and influence a business manager has on that characteristic. The macro environment consists of factors outside the business over which the business has no control, such as legal, political, social, economic, technological, global, and corporate social responsibility factors. The operating environment consists of factors outside the business over which the business has little control and influence, including customers, competitors, suppliers, and special interest groups. The factors or groups in the operating environment are stakeholders, which the business interacts with regularly. The internal environment consists of factors inside the business such as employees and managers, locations, and legal business structures. The internal environment to some extent is influenced by the external environment. Both will have an effect on the decisions made when planning a business. However, this topic, the internal environment, will be explored in greater detail in another video. There are 6 key areas that this course covers that make up the macro factors for a business, which need to be looked at when planning. The first is legal and government regulations. There are many laws and regulations that during the planning stage, business owners need to ensure their business will comply with. These regulations come from all 3 levels of government. Some important ones include business name registration, company registration, employment regulations, which includes anti-discrimination regulations and work health and safety regulations, trade practices and consumer laws, as well as environmental protection regulations, which often or generally come from the state and federal parliaments. Some local government regulations businesses need to be aware of when planning include in the areas of zoning and health regulations. Societal attitudes and behaviour is the second area of the macro environment we will explore. Our society has constantly changed and evolved its social values, beliefs and trends, which all need to be considered when planning a business. Social values and beliefs are the shared principles and morals of a group of people or society, including the need to protect the environment and the expectation that business will contribute positively to society. Looking at the example of the environment, if you were to look at the attitude towards the environment businesses had in general about 100 years ago, you will see it is vastly different than it is today. This reflects the evolution of a social value or belief, or social values and beliefs. A trend is the general direction in which people's attitudes or behaviour in society is developing or changing, including demographics and family-friendly workplaces. Trends emerge and disappear all the time. A business needs to be prepared to deal with this as it happens. COVID-19 has perhaps ushered in a trend which will see a greater expectation in society for people to be able to be more flexible with their physical workplace. This is an example of a trend which has been emerging for some time, but has been given a boost due to other macro level forces. The next area of the macro environment we will consider is economic conditions. The state of the economy needs to be considered when planning a business. The trends in an economy can and usually do influence the operations of businesses. Economic factors such as interest rates, tax rates, business and consumer confidence levels all have an effect on the decisions made by business owners during the planning stage. To explore one of these economic factors, let's look quickly at interest rates. When the central bank, or in Australia's case, the Reserve Bank, raises or lowers the official cash rate or interest rates, most banks will generally adjust the interest rates they offer on savings and loans accordingly, going up with an increase and down with a decrease. When rates go up, the ability for businesses to borrow money becomes more challenging, as it means they will have to pay back larger installments to cover the increased interest payments. The opposite is the case when the central bank lowers interest rates. It becomes easier for businesses to borrow money. Believe it or not, but this is actually the intention of the central bank. Right now we have record low interest rates. This means that the central bank is encouraging businesses to borrow money. In some countries such as Japan and Sweden, interest rates have actually become negative, which means that in some cases borrowers are actually getting paid to borrow money. Just to close off this point, interest rates, like other economic factors, impact how a business operates. In this case of interest rates, it affects their ability to access finance and ability to repay debt. The fourth macro factor we will look at is technological issues. Technological issues refers to the issues relating to the growing use of tools, techniques, or systems by businesses to solve problems or serve a purpose. Technological issues including changing markets and technological development which need to be considered when planning a business. Technology is ever increasing in its complexities, applications, and abilities. Successful business planning needs to be implemented to navigate these developments and changes to achieve the best outcomes for the business. Global issues is the fifth macro factor. This is a very broad area, and you can put a number of topics in this area, including overseas competitors and markets, foreign relationships, offshoring labour, exchange rates, protection of intellectual property, such as patenting and copyrights and trademarks, and at a global level, and online sales must be considered also. An example of a global issue that's very concurrent is globalization. Globalization is the idea of the world being brought closer together through greater communication, technology, and transportation networks. Globalization is the effect of high-tech communications, lower transport costs, and unrestricted trade and financial flows, which have transformed the world into a single market, producing a more integrated global economic system. Globalization means businesses now operate in a worldwide market. This has had negative effects on a number of regional business areas. A good example of this is the scaling down of manufacturing in Australia due to the greater efficiency and lower production costs that can be found in other countries. This has generally led to most medium and small-sized economies becoming more specialised in areas which they hold a competitive advantage in. You can see this in Australia's economy, as there are many clusters of businesses throughout which reflect economic specialisation. Some of those areas include mining, farming, education, and banking and finance. Corporate social responsibility issues is the final macro factor we will cover. It is one that is looked at on a more localized level in the next topic, but also has a macro side to it which we need to consider. Corporate social responsibility refers to managing a business in such a way that the broader social welfare of the community, including its employees, customers, suppliers, and the environment, is taken into consideration when making business decisions. When planning a business, corporate social responsibility issues will need to be considered. These issues include environmental considerations and planning the production of goods and services that are in society's best interests. Corporate social responsibility management practices have benefits and costs, which is why some businesses have trouble grappling and acting with these ideas. This is because despite valuing an idea such as acting responsibly towards the environment, certain actions a business may consider taking could be crippling to that business's financial health. The operating environment reflects the stakeholders which businesses interact with as part of their day-to-day activities. This course defines 4 areas in the operating environment, those being customers, competitors, suppliers, and special interest groups. The first and arguably most important group of these 4 that we will be looking at is customers. Without customers, a business would not exist. To attract customers, a business needs to operate in a way that will meet the specific needs and expectations with the customers they hope to attract, and have policies and procedures in place that allow them to fairly manage disputes that may emerge from customers. Customers are the people who purchase goods and services from the business. Expecting high quality at competitive prices is what customers generally are after. The needs and expectations of customers, including that businesses be socially responsible, must be considered when planning a business. Competitors and their behaviours are another major stakeholder that businesses need to factor into their planning. Competitors are other businesses or individuals that offer rival or competing goods or services to the ones offered by the business. During the planning stage, business owners need to be aware of existing competitors and also monitor the environment for potential newcomers. By observing the major supermarkets in Australia, Coles, Woolworths and Aldi, onlookers can get a good idea of how these large competitors manage to react to changes made by each other. A good example was in 2011 when Coles introduced the $1 per litre milk initiative. This was an offering the company had been keeping quiet until the day they launched the initiative. Within a week, Aldi and Woolworths were scrambling to organise similar initiatives to stop their usual customers switching to Coles to buy a fairly essential product. Since then, we've had all the issues around like farmers not being paid enough, and that actually leads us into our next area, suppliers and the supply chain. So suppliers are the businesses or individuals that provide the materials and resources that the business needs to conduct its operations. A supply chain is the range of suppliers from which the business purchases materials and resources. During the planning stage, the resources required for a business, where these resources are sourced and how they reach the business, need to be considered. The nature of what can be considered a supplier for a business can range from the producers of inventory that is sold by the business to the sources of office supplies used by the back end of the business. Further to this, individuals who are consulted for their expertise and services, such as accountants and solicitors, fall into the category of suppliers. Basically, anywhere or anyone businesses externally source something tangible or intangible from for their operations can be considered a supplier. Finally, special interest groups is the last area of the operating environment that businesses should consider during the planning phase. The nature of special interest groups, again, can be quite broad. Special interest groups attempt to directly influence or persuade a business to adopt particular policies or procedures. Special interest groups include specific issue groups such as youth unemployment, civil liberties, anti-globalization or environmental lobby groups, as well as more official groups such as business associations, unions and consumer groups who are looking after the interests of their various stakeholders. Special interest groups can be the source of negative attention for businesses, which is why it is important to be mindful of these groups and the issues they stand for. To conclude, I hope you found this video useful for your study and revision for topic 2 of Unit 1 in the VCE Business Management course. I do encourage you to come back and watch it again after you have looked into some of the areas of the course that you were not clear about, and see if you can use this revision video to identify other areas that you are not sure about. Thanks for watching. Take care.